Let's talk about interest rates and what to do in this crazy market. This is Danny with DA Properties. Let's talk about it. So interest rates, the big question right now that is coming my way from existing homeowners and new clients. Danny, what should I do? Should I refinance the house? Is this a great time since the interest rates are very, very low? Is it a great time to buy? And they're making this a focal point to make this big move and purchase a property. Well, two things. So item number one I want to discuss is your refinance option, right? So I'm not a big fan of refinancing simply for the reason that a lot of times people get focused on the APR, the interest rate, but they don't look at the length of the loan. So whenever we purchase a home for 30 years, right? Say you're paying 10 years into the property and you have a 20-year term remaining, right? When you refinance, most of the time, folks are gonna refinance for another 30 years. So they take in consideration the savings percentage. Well, I'm moving from 4.5% to 3.5%. I think this is a great idea. It's gonna save me some money on the front end. But what they're not paying attention to is that they just extended the remainder of the term, which was 20 years to 30 years. They purchased another 10 years of debt, if you will. So that's one thing that I need you guys to focus. When you're thinking about refinancing the home, don't simply look at just the interest rate and the APR. Focus on where you are in the term. If this is your first year, let's say you purchased a house 2 years ago and the interest rate for whatever reason was high, 5.5%, and you want to refinance today for like 3%, absolutely go for it. But if you're in it 10 or 15 years, time out, stop. Because you're extending your loan, item number one, right? This is so very important. So you're extending your loan for another 10 to 15 years, but also what's gonna happen is the amortization table is gonna shift on you. So if you purchase, and I'm gonna try to explain this as simple as I can. If you purchase a 30-year note, right? For the first 5 years, you're gonna be paying majority interest and very little principal. That equation is gonna balance sometimes around your 15-year mark, where you're gonna pay equivalent, let's say if your payment is $1,000, you're gonna be paying somewhere in the neighborhood of $500 principal and $500 towards the interest. But in the first 5 years, 6, 7 years, you're gonna be paying 70 to 80% interest and very little on your principal. So this is a very important item to keep in mind when refinancing, is that not only are you extending the length for the debt that you're borrowing, you're also restarting the cycle of the amortization for your loan, where you're paying more to the banks and less for yourself. If that makes sense. If you guys have any questions about any of this, obviously you can always email me, text me, call me, but this is a very, very important thing to understand, because people are so eager to refinance and they'll pay $2,000, $3,000 today to get it refinanced and restart the clock. And when I look sometimes at the history of certain homeowners, I see they refinance 5, 6 times in a row. It's like, okay, time out. You're not saving money by doing this, right? You're paying for refinance fee because there's cost associated with it. And next to the refinance fees, you're constantly restarting your debt clock, which is 30 years or 20 years, whatever it is. You're restarting it, and you're restarting, most importantly, you're restarting the amortization table that actually favors the bank and not you. So be careful when you refinance properties. I know the rates are extremely great today in today's market, but take in consideration where you are in the cycle in order to make the best determination if you should refinance at this time. One other thing I want to discuss about interest rates. So clients, friends, co-workers, everybody has an opinion on what the interest rates are going to do in the near-term future. Here's my 2 cents about it. So our interest rates back in the 2000s, according to Census and Bankrate.com, were about 7-8%, and consistently we've seen them drop to 6%, to 5%, to 4%. down now to 3%, even some high twos. That's what we're seeing. So the big question that everybody's having right now is, should I hurry up and buy a home? Are these rates going to go back up? This is my personal opinion after a lot of diligent research on this topic. I don't think the interest rates are going to go back up. I don't think you're going to see, and obviously this is going to be timestamped and you can go back on this, and if I'm wrong, it's going to be there for everyone to see. But I don't think that the interest rates are going to go back up to 5-6% ever again, not in the near future, unless or until we do something with our minimum wage, and that's going to take some time. Why do I say this? Year 2000, our average home price was about $180,000. That's year 2000, right? Fast forward to 2018, 2020, our average home price has almost doubled. We're at $360,000. So if you look at it, the prices of our homes, of our inventory, have really doubled in cost. Cost of construction, cost of labor, current market conditions, everything has pushed the homes over the last 2 decades to double in cost, okay? Our interest rates have gone from 7% down to 3%. So if you're seeing this, we have doubled in cost on construction and the sales of our homes, and we have gone down 100% in cost for our mortgage interest rates. Big question, why is that, right? This inverse relationship is only possible or doable just because our wages have basically stayed the same, right? So if you look, we haven't gone too much far from, average income back in 2000, according to census, was in the mid to high 30s, and we're in the mid to high 40s. So we haven't doubled our income. We've gone up maybe 10-15% in our overall average household income, but that curve is not going to support our 43% debt to income ratio in order for these interest rates to move anywhere from this position on, because the construction is not going to get cheaper, right? Our materials to build the homes and everything else, they're not going to get cheaper. The prices are where they are. So what is going to have to happen for these interest rates to inch up to 3 or 4%? There has to be a major reform on general wages, and people are going to have to start earning more money, just because that 43% DTI, debt to income ratio, has to be met. And if you push an entry-level home right now, which is $380,000, if you push it to 5 or 6%, most people are not going to be able to afford the housing. So this is my 2 cents. This is why I don't think you're going to see any crazy movement in the interest rate short term, just because we have this 43% DTI qualification requirement when people purchase a home. And if we inch on that higher without reforming the income basis in America, we're just not going to be able to continue having this great run that most people should own a home. So this is all I had to share about interest rates in today's market. Obviously, market changes every day, and this is something that's going to eventually, change too, hopefully. But if you have any questions, if you have any concerns, anything you want to know extra about this topic, please let me know. You can email me at info@daproperties.com, or you can always call me. I'm available to all my followers, my listeners. My phone number is 704-340-5435. Again, thank you for tuning in. This is Danny. You can like or subscribe to my channel. Talk to you guys soon.